Okay, let's unpack this. Imagine a crypto project that almost overnight went from being the third most valuable crypto asset out there, worth as much as MasterCard. Then boom, loses 95% of its value. We're talking billions just vanished. So what happened? And maybe more importantly, what's next for it? Today we're doing a deep dive into the Internet Computer, or ICP. We want to give you a really comprehensive understanding its tumultuous journey, the cutting-edge tech, and where it might be headed. Our mission is basically to give you the whole picture, from that controversial start right up to its, well, pretty ambitious future plans.
And what's really fascinating here, I think, is the mix of sources we've got today. It really helps us paint that picture. We're looking at a detailed forensic analysis from Arkham about those early token movements, but we're also bringing in more recent analyses on ICP's tech as it's evolved and, current market sentiment. So it lets us explore things from different angles and ask, how does a project even navigate such a dramatic start?
Right. Let's definitely go back to that dramatic start then. ICP launches May 2021, and the price just tanks. From an all-time high around $730 down to just $30. That's a 95% loss. Just staggering. It wiped out hundreds of billions in potential value based on its total supply.
Yeah.
You have to remember, at its peak, this was, shockingly, the third biggest crypto, right behind Bitcoin and Ethereum. Market cap comparable to giants like MasterCard, Bank of America, PayPal. It's kind of hard to fathom. And for the retail investors who jumped in, well, many lost huge amounts, millions, maybe billions collectively. It was just a brutal market entry.
Yeah, brutal is the word. And this is where that Arkham report becomes so important. It really tries to shed light on some, let's say, highly suspicious activity back then. Their findings are pretty stark. They identified addresses they suspected belonged to the DFINITY Treasury and Project insiders. And these addresses collectively deposited roughly 18.9 million ICP onto exchanges. That was worth about $3.6 billion at the time they were deposited.
$3.6 billion.
Yeah. And breaking that down further, the DFINITY Treasury itself directly deposited 8.3 million ICP, worth around $2 billion. Now get this, 94% of that direct Treasury deposit happened on just two specific days. May 10th, which was listing day, that saw 3.1 million ICP deposited. Okay, maybe initial liquidity, you could argue. But then there was another huge deposit, 4.7 million ICP, on June 15th. And the report explicitly says, well, that June 15th deposit, you really can't explain that away as just initial liquidity for trading.
So it wasn't only the direct Treasury movements. You mentioned other suspected insiders too.
Precisely, yeah. So beyond those direct deposits from the main Treasury address, the Treasury also sent out 34.1 million ICP to 34 other addresses that Arkham suspected were insiders. And those addresses then sort of intermittently deposited another 10.7 million ICP onto exchanges. That's another, $1.6 billion worth. So you add it all up, the Treasury deposits, these suspected insider deposits, and it accounts for roughly 75% of all the ICP deposited to exchanges during that initial period.
75%. Okay. And why is that inherently suspicious? Depositing to an exchange doesn't automatically mean selling, right?
Well, no, not automatically, but it's the primary reason, right? That's what the report highlights. Deposits to exchanges are generally for selling. Sure, you could argue it's for, secure custody, but Arkham says that's unlikely here. I mean, DFINITY has its own robust capabilities for self-storage. Plus, these weren't single bulk deposits, they were incremental over time. And critically, there was a significant financial incentive to lock tokens in the NNS for staking rewards if they weren't planning to sell.
Oh, okay.
So the report's implication is clear. If all, or even most, of the ICP deposited by these addresses was actually sold, that would obviously exert massive downward pressure on the price. And it would go a long way towards explaining that exceptional price crash we saw right after listing.
That is a powerful allegation, especially when you layer on the transparency issues that Arkham also pointed out. This apparent lack of transparency on token allocation and unlocking. It just seemed to fly in the face of industry best practices, didn't it?
Yeah, it really did. You look at other projects like Uniswap back then. They published these really clear articles. They had percentage allocations, explicit unlocking schedules, graphs, even links to the actual Treasury addresses, super transparent. Or Reserve, another example. They actually locked up all insider tokens until a major project milestone was hit proactively. I think they were still locked 2 years later. It builds trust,
Right. But with DFINITY...
With DFINITY, it was different. The founder, Dominic Williams, actually revealed on Twitter weeks after the launch, mind you, that the DFINITY Foundation itself had no vesting schedule for its reported 25% supply.
No vesting.
Yeah. And that lack of clear, upfront information, it's exactly what spooks retail investors. It feeds directly into that major fear in crypto, the rug pull, the team dump, the VC dump, whatever you want to call it, where insiders cash out and leave everyone else holding the bag. Those best practices exist specifically to prevent that kind of scenario.
Okay, so lack of transparency for the foundation's tokens. But what about the early investors, the ones who got in really early?
The seed supporters. Yeah, that's another big part of the Arkham report. These were the really early backers from like 2017. They had essentially donated to get ICP at just a few cents per token. They were collectively entitled to about 25% of the total supply. So obviously they stood to make massive gains if they could actually access their tokens.
If they could access them. Sounds like there's a catch.
There was. First, clarity on how their tokens would unlock wasn't even provided until the day of listing. Imagine the anxiety. Then, the description they got for their 4-year vesting, it involved these things called voting neurons, 49 of them, with varying dissolve delays. It was apparently incredibly unclear. Just quickly, voting neurons are basically staked ICP, allowing you to vote, and dissolve delays control how long it takes to unstake or unlock them. But beyond the confusing structure, the actual technical steps to claim these tokens were super complicated.
How complicated?
Like, not even possible on standard Windows PCs or the newer M1 Macs at the time. You saw people on the DFINITY forums expressing sheer desperation. One user literally said they bought a MacBook just to access their tokens.
Oh my God.
And according to the report, DFINITY offered little help. People submitting support tickets were often just redirected back to the public forum. So you see how this ties into the report's overall theory.
Yeah, I think so. If insiders were planning to sell a lot of ICP.
Exactly. If they intended to dump billions of dollars worth, it would make strategic sense to make it difficult for the seed supporters to access their tokens. Why? Because those seed supporters represented the single biggest group of potential rival sellers. Delaying or hindering their access would significantly reduce that immediate downward price pressure, potentially letting insiders sell their own stash at a better price.
Okay, wow. So let's piece this together from the Arkham report's perspective. You've got these huge deposits hitting exchanges, mainly from the Treasury, and addresses Arkham flagged as insiders. You've got a real lack of transparency around tokenomics, especially compared to other projects. Then you have this incredibly complex, almost Byzantine process for the earliest outside supporters to even get their hands on their tokens. And all this is happening against the backdrop of a massive price collapse. It certainly paints, well, a concerning picture.
It does, and the report is careful, right? They state very clearly, we cannot definitively say that ICP insiders carried out a pump and dump or a rug pull. They don't have direct confirmation that these were insiders or absolute proof that deposited tokens were sold. But they conclude the evidence gathered suggests activity by ICP insiders that many would view very negatively. So it's less about a smoking gun, maybe, and more about highlighting how critical transparency and clear communication really are, especially in crypto where things can be so opaque.
It's absolutely a cautionary tale, perhaps. Okay, so that covers the turbulent beginnings. Let's shift gears now. Let's talk about the internet computer today, the actual technology, the vision, moving beyond that initial storm.
Right. So fundamentally, ICP positions itself as a revolutionary blockchain. Its big idea is enabling unlimited data storage and computation directly on-chain, the core purpose, to essentially extend the functionality of the internet. They want to create a decentralized computing ecosystem where software, websites, entire platforms can run directly on the internet itself. No need for traditional centralized cloud hosting like AWS or Google Cloud. It's developed by the DFINITY Foundation, led by Dominic Williams, and they have a pretty large R&D team behind it.
Okay, software running directly on the internet. That's a huge claim. How does the tech actually work? What are the key pieces?
It's built on a few core, quite innovative components. First, you have canisters and subnets. Think of canisters as super-powered smart contracts. They hold both code and data. These canisters run on a network of nodes, and these nodes are organized into subnets. You can think of subnets sort of like shards in other blockchains. They run in parallel, which is key for scalability. Developers can use a language called Motoko, which is designed to be pretty developer-friendly to build these canisters.
Okay, canisters and subnets for scale. What else?
Then there's chain key cryptography. This is their novel consensus mechanism. It's pretty unique. It allows the entire ICP network to have a single public key. Individual nodes use components of the corresponding secret key to jointly sign messages. This drastically reduces transaction finality times. We're talking low latency, high performance, very robust, crucial if you want to run, say, web speed applications on a blockchain.
Right, speed is always a bottleneck. What about talking to other blockchains? That's a big deal now, interoperability, especially without relying on bridges, which can be risky.
Exactly, and that's a major focus for ICP, cross-chain interoperability. Their goal is direct integration with other blockchains without bridges. They've already achieved native Bitcoin integration. This means ICP canisters can directly, trustlessly hold and transact Bitcoin on the Bitcoin ledger itself. No wrapping, no bridges. And integrations with Ethereum EVM and Solana are apparently underway or next on their roadmap. The idea is that eventually canisters on ICP could directly interact with Ethereum tokens or smart contracts and vice versa, completely trustlessly.
That direct integration, if they pull it off widely, could be huge. What other standout features are there?
Well, there's the reverse gas model, sometimes called canister pays. This is quite user-friendly. Basically, the developers charge up their canisters with cycles, which are the computational resources to pay for the computation and storage their application uses. End users, they generally don't pay gas fees to interact with the app. Makes for a much smoother web experience.
Oh, interesting. Like Web2, almost, from the user's perspective.
Sort of, yeah. Then there's decentralized identity, which they call internet identity. It allows for passwordless login using cryptographic authentication like Face ID or security keys. The idea is to give users control over their digital identity without relying on centralized providers like Google or Facebook. And overseeing all of this is the network nervous system, the NNS. It's described as the brain of the internet computer. It handles the decentralized governance. ICP holders stake their tokens in those neurons we mentioned earlier to vote on proposals for upgrades, economic changes, everything really, and they earn rewards for participating.
Okay, that's quite a comprehensive system. You mentioned performance earlier. How do the raw numbers actually stack up, say, compared to Ethereum, the current giant?
Right, the comparisons are pretty stark, and they really highlight ICP's focus on scale and efficiency, using figures from CoinHustle. Average block time on ICP about 0.936 seconds. Ethereum, around 12 seconds.
Wow, okay,
Yeah.
big difference.
Huge. Average transaction cost. ICP is fractions of a fraction of a cent, like 0.00000022. Ethereum, as you know, can be several dollars, here cited at $2.39 on average, and maybe the most dramatic on-chain storage. Storing 1 gigabyte for a year on ICP costs around $5.
$5, okay.
On Ethereum, same gigabyte for a year, $15.5 million, approximately.
Million, with an M?
Million with an M. $15,494,409 according to that source, and transactions per second, PPS. ICP reportedly handles around 5,382 TXS. Ethereum averages about 11.1 TXS. There's also a metric for raw compute power, MIAPs, millions of instructions per second. Ethereum's max is cited as 1.25 million MIAPs, while ICP's is 20,000 million MIAPs.
Those numbers are just orders of magnitude different, especially the storage cost. That alone could enable completely new kinds of applications, couldn't it?
That's exactly the potential, yes. It's not just about being incrementally better. It's about enabling things that were previously economically or technically impossible on-chain. That's the paradigm shift ICP is aiming for. Making decentralized applications not just feasible, but efficient and cost-effective at scale.
So with that kind of foundation and ambition,
Yeah.
what's the roadmap look like now? What are they building towards?
Well, they put out a new updated roadmap in May 2024. It outlines 9 key focus areas, things like decentralized AI, improving the developer experience further, enhancing on-chain privacy, and this concept they call chain fusion, likely related to that direct interoperability. Some specific proposals mentioned include boosting subnet capacity dramatically, aiming for over 100,000 canisters per subnet. Also, things like enabling SSH access into the host OS layer for enhanced security and debugging, pursuing that direct Ethereum integration without bridges. And they have this interesting, maybe slightly unusual concept called people parties for validating personhood.
People parties, what's that about?
It seems to be a novel approach to Sybil resistance, improving unique personhood online. The idea involves randomly assigned groups of users meeting, maybe virtually, maybe physically, to mutually validate each other's personhood in a scalable way. It's definitely an innovative take on digital identity.
Huh. Okay, so they're definitely not short on ideas or ambition. Sounds like they're really trying to tackle some fundamental infrastructure issues. how does all this translate into where ICP stands in the market today? We talked about the crash, but where is it now?
Right, so let's bring it up to the present, market-wise. We covered the dramatic fall. Where is ICP hovering now? The sources we looked at from around March, May 2025 put the price somewhere in the $5 to $13 range. Market cap is still substantial, around $6.3 to $6.4 billion. But yeah, a very, very long way from that $750 all-time high. A very long way indeed. And when you look at price predictions, well, it's kind of all over the map, which tells you something about the uncertainty. For 2025, for instance, Simple Swap suggests a potential max around $37.80. Bellabit goes way higher, suggesting $85.30 max. But then CoinCodex is much more conservative, predicting a max of only $7.49. CryptoPaulsum forecasts around $11.20 max. Quite spread.
Yeah, that's a huge range. What about longer term, like 2030?
Similar story, lots of divergence. Simple Swap is bullish long term, predicting $254 by 2030. Crypto News sees maybe $75.56. Coin Edition around $110. CoinCodex remains very conservative, predicting only $10.46 by 2030. And as for hitting, say, $1,000, most sources suggest that's not very likely anytime soon. Simple Swap tentatively puts $700 potentially reachable by 2040. I think this massive range really underscores just how volatile and speculative these assets can be, even one with ICP's tech and backing. Market sentiment, adoption, external factors, they play a huge role.
That makes sense. So beyond just looking at charts or predictions, what are the core factors that you'd say are influencing ICP's price or could influence it going forward?
Well, there are several key things. First and foremost is adoption and genuine use cases. Is the tech actually being used to build popular apps and services? Then there's competition. ICP isn't alone in this space. You've got Polkadot, Cosmos, Ethereum with its layer 2s, all tackling scalability and interoperability in different ways. The regulatory environment is huge, obviously. How governments approach crypto and decentralized infrastructure will have a massive impact. Continued technological advancements are critical too. Can DFINITY deliver on its ambitious roadmap, especially things like direct ETH integration? General market sentiment towards crypto as a whole plays a big part. Is it a bull market or a bear market? And finally, simple market liquidity. How easy is it to buy and sell ICP on major exchanges? Oh, and from a technical analysis perspective, some sources noted ICP trading above key moving averages, which is often seen as bullish. And there was that breakout above $9 back in December 2023.
Okay, lots of moving parts. So the big question, considering everything, the controversial start, the impressive tech, the ambitious roadmap, the volatile market, how should you think about ICP if you're considering it as, say, an investment?
Yeah, that's always the million-dollar question, isn't it? Or maybe the $6.4 billion question in this case. Look, the sources are pretty consistent in acknowledging both significant potential and significant volatility. That's sort of the package deal with many ambitious newer blockchain projects. ICP is definitely positioned as a platform with potentially revolutionary technology, but it's also still relatively early stage in terms of widespread adoption compared to incumbents. The fact that it has backing from prominent investors and venture capital firms is often cited as a positive, providing some stability and credibility. But ultimately, as one source put it, its value depends on lots of factors outside the team's control. Things like regulation, overall macroeconomics, competitor moves. So it really comes down to balancing the technological promise against the market risks and the project's ability to execute and gain traction. It requires careful consideration of all those factors.
Absolutely. Wow, what a journey we've taken today with the internet computer, really, from those incredibly dramatic beginnings and the controversies highlighted by the Arkham Report, all the way to this bold, perhaps audacious vision for a truly decentralized web powered by canisters and chain key crypto.
It really is quite the story. And if you connect it back to the bigger picture, the ICP saga kind of highlights this crucial tension you often see in emerging tech, especially crypto. It's that push and pull between, on the one hand, incredibly ambitious innovation trying to remake the digital world, and on the other hand, the absolute necessity of transparency, clear communication, and protecting investors and early supporters. It really makes you think, doesn't it? In this drive towards decentralization, what fundamental responsibilities do these project foundations, these core teams, actually owe to their communities, especially those earliest believers? How do you balance radical innovation with building sustainable trust?